Mr. Saylor has come along. Mr. Michael Saylor, an engineer, just decides to play, uh, uh, you know, basically he's launched an attack against the monetary system. Okay, so he's turned his software company, Microstrategy, uh, basically into shorting the dollar. Like this is effectively what he's doing with this, where he is raising equity in the capital markets and buying Bitcoin. Okay, a relatively small software company, and was issuing shares and buying Bitcoin. Okay, extreme amounts of volatility. Extreme amounts of volatility. I mean, if you think Bitcoin is volatile, wait till you see the common shares of MicroStrategy. Okay, it's okay. You're basically buying leveraged Bitcoin. Bitcoin goes up, MicroStrategy is going to go up by more than a factor of the increase in Bitcoin. Bitcoin goes down, MicroStrategy is also going to underperform to the downside. So it's, more volatile than Bitcoin in both directions. And for some people, that's what they wanted. Some of our degenerates out there, you've already owned MicroStrategy shares. Some of our fans, I know, I've met you guys at the boot camp. So, we talk about like good allocations of, we know all these asset classes, and I try to, get the indoctrination out of people to think that we're going to pick the right asset class. And then I tell people it's like the right asset class, to pick the right asset class, you're assuming the rules of the game don't change, right? And we guide people. It's like, there's real estate, there's dividend paying stocks, there's gold, and there's Bitcoin. And, what do I think is going to happen long term? It's like, well, I mean, in the next 10 years, I think, I don't know, I think gold will outperform, basically dividend paying stocks will probably outperform Canadian real estate. I think gold will probably outperform dividend paying stocks. And I think Bitcoin will probably outperform gold. That's probably the way it works out. But I tell people, it's like, why are you organizing your life that it'll probably work? Like, that's not really a financial plan. That's not a path to financial freedom. Just like it's not a path to financial freedom to assume real estate's going to go up each and every year, right? Because if someone did that and they played with margin, like they got burned, right? And even if they didn't play with margin, they lost according to the money supply. They did lose purchasing power according to the money supply. So MicroStrategy comes along, and you could buy MicroStrategy shares. Then they come with a series of preferred shares. And so, I mean, we're talking about a software company, that was worth $1 billion or two. Okay. But then he just starts buying Bitcoin on the balance sheet. So basically selling common shares to buy Bitcoin. Okay, great. And some people will say, well, why don't you just buy the Bitcoin itself? You have to remember, when he first started doing it, there was no ETF in the US. So this was the proxy. So if you wanted to buy in any sort of registered account, or if you had any sort of restrictions and you were trying to get exposure to Bitcoin, people were doing it through MicroStrategy. In other places in the world, they're still doing it through MicroStrategy because they don't have access to an acceptable ETF, right?
Yeah.
So it was a vehicle in. But then, as the ETFs get launched, what's the value proposition? Okay, well, the value proposition was he's going to go and borrow money, okay, to buy Bitcoin. Okay, he borrowed $8 billion to buy Bitcoin. Okay, so we're talking about they own 717,000 Bitcoin. Okay, most of it has been purchased through issuing common shares and buying Bitcoin. Okay. Then they borrowed $8 billion to buy more Bitcoin. So it's like, yeah, you could go buy IBIT or one of the Bitcoin ETFs, or I can go and issue debt at very low interest rates. So he finds that he can issue debt at very, very low interest rates. And some people will misunderstand that the interest rates were just because of like the COVID period. And to some extent that's true, but to some extent the nature of the debt that he raised were people who just wanted exposure to Bitcoin upside. So basically, they have an option to convert those loans to Bitcoin. So they didn't want to take the full ride. They were willing to almost give a loan interest-free. So basically, if Bitcoin goes to this level, I can trade it for common shares and I haven't missed out on the opportunity. If it doesn't go to this level, you just give me my money back. The interest was secondary in the deal, right? And you start looking at, I can actually walk through it here on the debt. So you start to see the coupon rate, $8 billion with an average interest rate of 0.4%, less than 1%, right? So this is, why would you buy Microstrategy at that time instead of, because someone could just lever up the Bitcoin ETF in their own investment account, right? But, that's a mark-to-market loan, changes based on, the date. This is not loan that has it's not marked to market every day. There's no margin call. People are misunderstanding this. They think there's a margin call. You can clearly see the earliest call date, okay? The earliest call date is this one here, okay? So this is December 4th, 2026, okay? And it's basically going to be due for $3 billion, okay? Like it's going to be due for $3 billion. Okay, that's the earliest time. That doesn't mean that they're going to call it. That just means they could if they're not happy with it, right? They also have an option to convert if the share price was $672 per share. So if MicroStrategy stock skyrockets, would they convert? Okay, maybe. So, but I'm just trying to give you people a high level of like why someone would at that time, because there was the point in time where you bought MicroStrategy just because you wanted exposure to Bitcoin and you couldn't get an ETF in a lot of markets.
Yep.
Then you can get an ETF, but guess what? MicroStrategy can borrow money to get a leveraged Bitcoin play better than most people because they have access to capital markets. Okay. Then it came about that, in listening to interviews with Michael Saylor, he basically states that this private debt market that he raised $8 billion was not actually a large market. The bond market as a whole is really big, but these types of private debt, he described it in one of the interviews I listened to a while back as basically like it's a small number of people who meet infrequently and just basically, it's like this small club and he's like, there's billions of dollars. Yes, but there's not trillions of dollars being traded like this. Okay. So he realized, MicroStrategy is never going to be, he wants to be $1 trillion company. He looks at these like the Apples and the Nvidias, like, why am I not there? Right. He realized that this is not the vehicle, right? Issuing the common shares was good. Okay. But this is not the vehicle. So he needs a different vehicle basically to attract the masses, the big capital. Okay. And I give people here's like a visual representation. This is a little bit old, but at this time, the global assets worth 730 trillion with a T. Get comfortable, people talking millions, billions, trillions, trillion with a T. Okay. And then get comfortable, quadrillion. Okay, next. Okay, because we're probably there now by the time this was done. Okay, real estate. So it means if you add up all the assets in the world, real rough, the real estate was worth 300 trillion, the biggest asset, not just in Canada, across the globe. Okay, cash, money markets and cash, 137 trillion. Bonds, 127 trillion. Stocks, by comparison, 110 trillion. Most people would not understand that they think stocks are bigger than the bonds, or a lot of people probably even think they're bigger than the bonds and the cash put together. They're not, okay? You can see the date of this now because you have the physical commodities, basically, and precious metals, 16, way higher than that now. Gold's way higher than that now. But still, it's a small box here. Still, it's a small box. Okay, so he needs more capital. What's the value proposition of MicroStrategy? And so he comes up with, I'm going to issue some preferred shares. And the first one he issues is called STRK. Okay, issues this in February of 2025. Okay. It had at the time, it was issued with an 8% yield. So they're issued in $100 increments, 8% yield. It now trades below $100. So you're getting an effective yield of 10% because the market just decides, okay, what do I really want for this product? And basically they decide that you can issue it whatever nominal price you want, just like the 5-year bonds that the government issues. You can put whatever whatever coupon rate that you want, but the market will decide the yield that they want based on the price that they're willing to pay. Okay. So you could have a coupon rate of 0%. Well, that doesn't mean they won't get any yield. They just won't pay full value because they're going to pay below the face value, and that'll give them an effective yield. Okay. So the market decided that this effective yield, and in his engineer brain, I think this had a convertibility. Okay. So this is basically, you can take this unit that was issued at 100, the nominal value of 100, and basically you have the right to convert it to 1 common share. Okay. Or sorry, 0.1 common share. 0.1 common share. Right now, you wouldn't do that. Okay. You wouldn't do it because why would I take this thing that is basically trading at $80, okay, and giving me an effective yield of 10%? I'm getting an effective yield of 10% and trade it in for common shares. 0.1 of these will be worth $13. But I have the option to convert it.
Sure.
So at some point, if this runs, as it gets closer to the conversion price, that call option, if you will, is worth more. Right now, it's pretty small because you need a 6 or 7 bagger from here before anybody's converting those preferred shares to common shares. Okay. But that was number one. The other beauty of these preferred shares, and then he also issues so that's February 2025. That's the first one. The next one is STRF that was issued in March of 2025. Okay. This one here is less risky. It's basically the most senior. So if dividends are going to be delayed or if there's going to be some sort of windup, these guys rank basically the highest of all the preferred shares. So the debt would rank first and these would be next in line. So the risk of losing your capital is the lowest in this one. They have cumulative dividends. So in some of them, they can not declare the dividends and just start again if there's a cash flow shortage. In this one, they have to pay you eventually. Okay. And that's why this one trades higher, but it has a lower effective yield. Okay. I have less risk, so I'm willing to settle for a lower rate. Okay. That's STRF. And then STRD was issued. It didn't have the conversion. Okay. But it didn't, rank like the STRF. So it's non-cumulative dividends. If they decide that they want to skip the dividends, they can skip the dividends if they want. Okay. That's where it was sitting. Those three, so were issued February, March, and June. Okay. And this puts them on a really interesting path. It was a good value proposition because people don't understand these preferred shares. They can't get called. There is no margin call. Okay. There is an expiration date here on these. And so people will say like, oh, Michael Saylor's going to get margined. And other people saying he can't get margined. It's like, it's right here. These are perpetual preferred shares. Okay. That shareholder can't go and demand, give me my face value back. They can't. Not today, not tomorrow, not ever. Some of them have the right to trade it in for common shares, but they can't create a cash call. They can't create a margin call. This debt, it's right here. It's not difficult to understand. You can go, I love this site too, because you see all these investments and they got this pages of fluff and stuff. And you just go right on to strategy.com. It's like, here's my numbers. Figure it out. You know what I mean? It's kind of like a Satoshi thing where it's like, if you don't understand it by now, I don't have time to explain it to you. Right? Like,
fair enough.
He just tells people what it is, right? And so this is the first cash call on December 4th, 2026. Okay. And the lender could say, I want my $3 billion. Okay. They could say, I want my $3 billion. Keep in mind, He has $48 billion in Bitcoin. After the drawdown, after this 50% drawdown, his $48 billion in Bitcoin. He also has $2 billion in cash just sitting there. Okay, so $48 billion of Bitcoin they could sell. He's got $2 billion in cash. Oh, and by the way, they raised $4 billion last month. Last month, they raised $4 billion. Okay.
So even if they want to, refund all or, sell back all of their stock, they can, and they've got the cash to do it.
That's right. That's right. And what really accelerated, these were very interesting, and it gave it a value proposition. I was a fan. I saw this like, I'm a fan, right? I don't know if I'm really an investor at this point, like beginning of 2024. I'm kind of a fan of what he's doing. I think I told people, it's fun. My $7,000 annual TFSA limit by Microstrategy. 2025, it's fun. My $7,000 TFSA limit is Microstrategy, right? Even at that point, I'm not really like, is it, am I wearing my investor hat or am I wearing my fan hat? I'm wearing my fan hat. Okay. At that point, I'm wearing my fan hat. It's 14,000. It's a small percentage of my portfolio, but it's fun. It's like tickets to a hockey game. It's not an investment, but you just want to buy a ticket to the game. You just want to say that you were there. Okay, good. Then July 29th, 2025 comes along.
Okay.
And he issues STRC. Okay. So I want people to understand these instruments here. STRK number 1. He has raised, these are worth $1.1 billion. Okay. Raising $1 billion, nothing to snap at, right? But are you going to get to $1 trillion company with that? I don't know. 1.1 billion. Okay. Then STRF here, $1.3 billion. Okay. So people actually liked the more security. Okay. Between the two is like the conversion. I think there's a lot of retail people who don't understand the conversion. I think they think they're really participating in the upside that much. It's like your participation in the upside is very, very marginal. You have an option to convert your units for 0.1 of the common shares, which wouldn't make sense unless there's a 6 or 7x from here on the share price. But nonetheless, that's where we are. Okay. Then you get STRD, which, in June of 2025 has that fixed rate, more risk. You rank lower in the seniority table, and there's no cumulative dividend. So if they decide we're not paying, we're not paying. There's no conversion here, and you get it in the yield. Okay, this is the most, I would say it's the most risky product, and you're getting 13% because of it. Okay, but anytime they can skip that dividend. Okay, that's what people don't understand. It's like they can skip these dividends. Only one of these is non-cumulative, and which means like they can still skip it. Just eventually, when they start paying, they got to pay those out, right?
Gotcha. So they hold on to it in order to a later date.
There you go. Yeah. There's another $1 billion. Okay, so it's 1,081 million. There's another $1 billion. Then July 29th, 2025, he comes up with STRC. And it might seem like, because all three of those were fixed rate, 8%, 10%, 10%. The two 10%ers have different seniorities. And, one of them has non-cumulative dividends and one of them doesn't. Effectively, that's the main crude differences. There's some other differences, but those are the crude differences between them. Now you get to STRC. STRC was different, right? And he talks about that he actually developed this talking back and forth to AI. This is how he came up with this thing, right? Now, he's raised $3.4 trillion.
Wait.
One instrument, one preferred share.
Billion.
3.4 billion. Yes, sorry, getting ahead of myself here, right, Trevor?
Hang on.
Yeah, we're not there yet.
3 trillion. Woo.
Not there yet, right? But maybe foreshadowing some things to come. So $3.4 billion. And this is since July 29th.
Dang.
This is the biggest preferred share issuance in history. I mean, you issue these things. You don't really know what the market's going to take off until it does. But then Why did this happen? What is different about this? This has a variable rate. The first three are fixed, 8, 10, and 10. This has a variable rate. What that does, when you have a fixed rate, if you're trying to normalize the price for your investors, all you can do is issue more or buy them back. Okay. But this gives two ways. So with STRC, you can issue more if you're trying to normalize the price for your investors to make them feel comfortable. Because remember, all of these preferred shares are for people who don't want to ride the roller coaster of the common shares.
Right.
The common shares theoretically will get paid the most over time, but they're going to have the wildest fluctuations in this very long journey that he has embarked on, right? So this one here, so what happens with STRC is he has the ability to dial the dividend up or down. So not only I can issue more, not only I can buy them back, but I can change the dividends incrementally every month. There's some restrictions on how much you can increase or lower, but pretty much they have two dials. Okay. What that allows them to do is peg this thing. Okay, so now this one here has the lowest volatility, right? And what got me really interested, recently was, okay, this is new. People who have been to the boot camp, like we tell people, we show you a sample treasury and we show you shares that have been paying dividends for at least a decade. And in that decade have grown the dividends and have never cut the dividends. Okay. This has been going for like 7 months.
Not quite 10 years.
Complete opposite, right? But what happened? I think, Bitcoin's part of a healthy portfolio. It's part of a healthy portfolio. It's like, I don't understand the no coiners, and just like I don't understand the no real staters, and just like I don't understand the no stalkers and the no golders. I don't understand just the aversion to the true diversification. I think that's just becoming like some sort of religion or tribalism, right? Like, even if you like an asset, you should recognize the risks of that asset, or you're not being honest, right?
I got my 60-40 split. I'm good.
Yeah.
I'm good.
So you see Bitcoin coming down, and I posted on the Instagram channel, it's like $88,000. I'll buy another Bitcoin. Okay. So you got to remember, my journey into Bitcoin. I started buying Bitcoin in 2022 at about 40,000 Canadian. These are all Canadian dollars that I'm saying here. And I'm buying all the way down to 20. When it goes down to 20 is like, I had conviction in the asset. I'm more excited to buy at 20 than I was at 40, right? In fact, it took me a while to get off the edge because, not too long before that, it was trading at 80,000 Canadian, right? Yeah. And so it wasn't until I hit 40 that I'm like, I got it. I see these persistent deficits. There's no fixing this thing. There's no turning this ship around. The governments have no plan. It's just debase the currency. We all need insurance. Bitcoin and gold is the answer. Okay, I start buying at 40, down to 20. And then, regulatory changes, things happen. I buy a bunch more at 40,000 Canadian. Ride it all the way back up to 170. I think we touched 170 one day Canadian. Okay. And so when it starts crashing, it's like, do I not believe in the assets? No, I bought it forever. I don't think people understand. It's like, I'm not buying quality assets to sell for fake cryptocurrency.
Mm-hmm.
I'm buying it because I can generate cash flow with all these assets, including Bitcoin. Okay. Now the options are somewhat limited, but they're already there. I can already generate yield on Bitcoin. I'm not planning on selling my assets off, right? I'm planning on generating cash flow from the assets, and that's what we show people in the bootcamp. Okay, so it goes down, and I post, 88K. That's my target. I put two lines, like 88K. That's my 50% drawdown. That would be close to previous support levels. I'm not a technical trader. I buy assets forever. And it was close to the 200-week moving average. And so you get there and it's like, that's too good of an opportunity. That like every once in a while something comes along. It's like 88 is target number 1, 44 is target number 2. So at 88, I'm going to buy another Bitcoin. At 44, I'm going to buy another Bitcoin. Do I need another Bitcoin? No. Was it a good portfolio allocation? Would I have looked at that with a client and made the same recommendation? No. But I like having some fun sometimes. So I'm going to buy another Bitcoin. Okay.